Welcome, everyone. I'm so glad that you are joining us today. I've been looking forward to this for months. We are speaking with Ruth Shaber, who is the co-author of The XX Edge. Now, this book is about why female investors, diverse teams, investings perform better. So this is something that's close and dear to my heart, and loved her book. I'm excited to share it with you. So thank you for joining us. First up, I need to do a little disclosures. So this is not an offer to buy or sell securities. It's there's more disclosures in the lower right-hand corner. You can read all about it should you want to. So let's get into the meat of it. So what we're going to do today is put a little context first. So I'm Laura Rippey. I'm the managing partner for the Women's Fund at Alumni Ventures. So I want to just kind of give a little context of where I come from in this conversation and where we join Ruth then for the fireside chat. And I will tell you, we have a very packed house for this webinar. So I know that there's going to be questions that come in. Haley on my team is in the back. She's going to be taking all those questions, and Ruth and I hope to answer some of those. So please do put your Q&A in the chat. If you have already read Ruth's book, if you're curious about the topics, please start to drop those in. So with that, why don't we give a little bit of context here. I want to share kind of why we came to Ruth, but first, just from a platform perspective, for those of you who are new to Alumni Ventures, we are America's largest venture firm for individual investors. About 10,000 people have joined us. We have raised $1.3 billion. And we invest exclusively in venture-backed startups. We do it with a portfolio approach. So you join a fund, the investing team puts about 20 companies in that fund, and that is how we have grown from 2014 to now. We are the most active VC in North America. We are the third most active globally, and it's all about empowering individuals to add venture to their personal portfolios. So one of the funds that we run, that I run, I have multiple roles at Alumni Ventures, but the one we're talking about here, most germane, is our Women's Fund. So we started it this year. As I said, it's a portfolio approach. An individual joins us. You have to be accredited, which means you make over $200,000 a year, or you have $1 million in assets. That's the threshold that the government sets up. You join us with one check. We then deploy it, my team, in about 20 companies over the course of a year. And then you have a piece of America's future. You have a part of the innovation economy in your portfolio. You can use retirement funds, you can use cash, you can use a trust. We have a whole sort of methods, and the minimum commitment is $25,000. The team, and this is germane to our conversation with Ruth today, so the investing fund team for the Women's Fund is made up myself, Mira, Sophia, Brittany. We just added a new team member, Shivani. So my background coming into venture, I was a CEO 3 times. I started my career at Microsoft and in strategy consulting. I also at Alumni Ventures run our Harvard Fund and our Dartmouth Fund. If you know by the name of Alumni Ventures, we have a very school-centric approach. I'm also on the board here at Alumni Ventures. Mira and Sophia are partners. Mira specializes in our seed stage investments. She's on the West Coast in our Menlo Park office. Sophia focuses on AI and blockchain, and Brittany on my team has expertise in fintech. So we come to it with a wide, vast amount of experience, and then we choose our portfolio companies based in part on the trajectory of the companies, on the power of the founders, and also by the co-investors we join. And the common thread for the Women's Fund team, of course, is that all of the companies in the portfolio have female CEOs or co-founders. We've been winning some awards. So these are 2 of mine. Seed 40, the best women early stage investors for 2024. And then the one on the right, which is a little bittersweet, 100 best early stage investors of 2024. That one, there's only 7 women out of the 100, but glad to be a part of that and bring that expertise as we build the Women's Fund. to give you a taste of our portfolio companies, some of these you may know. Kindbody, it's led by Gina Bartesi. It's a femtech company. We joined that back, gosh, Series A. It's now valued at $1.9 billion. It's a very impressive company. She is an incredible founder. Ellevest is also in the Alumni Ventures portfolio. Sally Krawcheck is renowned for starting Ellevest. Prior to that, she was a longtime Wall Street exec, and Ellevest specialty is investing for women. Most of their client-facing folks are women. Most of their investors are women. It's a very empowering place to have as a partner. Venus Aerospace, this is more classically a venture-backed company. They do hypersonic technology for global travel. So this is one where it's going to change the world. It's high tech. This is kind of the core of what venture investing is all about, and we're really proud of that team. Praxis Labs, led by Elise Smith. So this round, when we joined, was led by Norwest. Praxis Labs provides training software for managers and CEOs, and has a beauty list of the Fortune 100 as customers. Are doing really well. And the last is Carry First. This is a gaming and payments company in Africa, led by, co-founded by Lucy Hoffman. And this one we joined when Andreessen Horowitz was doing double their pro rata. It's led by a specialty gaming VC. It's a really impressive trajectory for Carry First. So to give you a sense, we have 350 portfolio companies out of all of the 1,300 at Alumni Ventures that are led or founded by women. And that's a starting point that gives us a leg up as you think about sort of our sourcing and as we grow the fund. So we're super proud of those existing companies. And this is just 5, just a teaser. My team could tell you about, go on forever, because we have so many to be proud of and more coming in every day. So I'm going to invite Ruth back, my friend Ruth, to join us. Ruth is the co-author of XX Edge, a book that highlights the overlooked investment strategy of including women as financial decision makers. I loved the book. As soon as I picked it up, I was actually turned on to it by a male investor friend of mine who heard that we were doing the Women's Fund and had to dig in and learn more, because once he had read the book, that has shaped his investing on a go-forward basis, and he always tends to choose female managers. Ruth comes to authorship with a really interesting background, starting as an OBGYN and then also as an executive in healthcare. So she's seen both the upfront and personal practice of healthcare, as well as management of larger organizations. And I'm just thrilled to have you join us today, Ruth, and thank you so much.
Such a pleasure to be with you, and I love that story that you heard about the book from a man. I mean, that's
yes,
that's a great data point. That's who we wrote the book for, is for men.
Yeah, exactly. Yeah, the women already know the answer. So what I want to do is kind of take a journey with you. Let's start with a little bit about how XX Edge came together with Patience Marie-May-Ball, your co-author. And let's start with kind of that origin story that we love to hear about when we talk about with founders. We're going to have this that little code come up again at the end. So have no fear, everyone. We'll get back to the book itself. But why don't we start with a little bit of the origin story, Ruth? I know that it's fun to talk to founders that way, and in many ways, a book author is also a founder.
That's right. Patience and I have extremely different backgrounds. My background is, as you said, is in medicine, and both as a provider and also as a senior executive at Kaiser Permanente. Patience was working for the World Bank and the International Finance Corporation, doing a lot of development work, but also mainstream investing. And she was certainly in the gender space before me, but my background in healthcare as a women's health provider and understanding the power of capital to bring solutions to women was really front and center. We started collaborating in 2019 on creating gender-focused portfolios, both in her case with the Women of the World Endowment, and in my case at Tara Health Foundation. So we were both looking at how do we create 100% alignment across all asset classes. And when we started collaborating, we realized quite quickly that we were outperforming the market, not in spite of having a gender focus, but because we had a gender focus. And we also recognized that the gender lens investing community was relatively small, and that we were all talking to ourselves. The women entrepreneurs, the women investors, we all do this magic, but that we needed to find a way to jump the fence and really educate mainstream industry and mainstream finance about this XX edge. And so that's why we wrote the book.
Love it. Yeah, it's always interesting when we have folks who can see across different categories to come from healthcare and go into investing. There's a great book called Range by Epstein that talks about that ability to make patterns. And this reminds me of that. So let's get into some of the nitty gritty. So what are the facts? What are the memorable bits that you want our folks to know about the advantage of having female and diverse teams investing?
Sure. And, when we set out to write this book, I am not an author. I am a physician, I'm an executive, I'm a project manager, I'm a systems engineer, I'm a problem solver. So this was really new to me, but I am really deeply embedded in the evidence-based practices and certainly in my history in medicine. And when we set out to look at the research around diverse investing and particularly gender investing, we were very sensitive to the risk of cherry picking. I didn't want to go at this and just pick out the studies that were going to prove our point. I really wanted to take a broad look across the industry. And so we buckled down, we hired some interns, and we looked at the evidence across all asset classes. And that includes public markets, entrepreneurs, venture capital, debt holders, government. When women were at the table making financial decisions, what happened. And everything that was published showed that when women were at the table, either it was neutral or it was positive, both in terms of financial returns, risk reduction, and also social impact. And I also just want to make clear that while we talk about women, and most of the evidence that we cite in the book is about people who self-describe as women, we recognize that gender is certainly not binary, and it certainly isn't this one or the other, that the types of traits and tendencies that women might be more likely to have are certainly, there are certainly plenty of men who exhibit them, and vice versa. There are plenty of women who don't have the types of behaviors that we think make them excellent investors. And I think ultimately what we learned is that this is about diversity. And it's about having different people at the table, not just all women or all men. And I think, Laura, you're asking about what did we find, and we can talk about some of the specific outcomes that we looked at, but there were some patterns that showed up that I think are really important to talk about right out of the gate. Women tend to be more collaborative. Women tend to be more networked and bring more inputs into their decision making. Women tend to evaluate risk differently, which doesn't mean that they're not risk takers. There are plenty of risk takers out there. You mentioned Sally Krawcheck in your opening remarks. There are lots of female risk takers, but they evaluate risk differently, and the literature demonstrates that women are less influenced by social factors when they take risks. So you think about men and gambling, and the gambling literature is really robust, that men tend to take chances based on social pressure rather than logic or rational models. And so I think women look at risk differently. Women also tend to look at the long view for outcomes, and they're less likely to sacrifice the long view for short term. And then something I'd love to dig into with you a little bit more is this notion of being proximate to problems. Women are closer to the problems that need to be solved. And this is especially important in venture capital and entrepreneurship when you're looking at where are the gaps in the markets that need to be filled.
Absolutely. You and I were talking before about an interview we did with Julia Boorstin from CNBC, and her book, I think it's How Women Lead, talks about some similar patterns where female leaders are very comfortable with getting frontline information. And that means that frontline information can come from customers, right? And that means you're more likely in a startup world to have faster product market fit development because you're taking in that frontline information. And from a leadership perspective, she has good data about how governors in COVID who were female with the same policy as governors who were male in COVID did better because they were listening to their front line and trusting those experts and bringing them in. So I feel like I'm hearing echoes of some of that with you, that consistency to say what is consistently a what might be called a female trait, to be able to listen, to understand and process that information from the front line, also means from an investing perspective, you're getting data that informs your decision that is irrefutable, but also is from sort of the raw, in the world situations. And that does indeed help us in venture, but it sounds like some of your research has been in the public markets. I don't live in that world. Is there anything in particular that sort of dominates how women invest in the public markets in particular that seems to be informative?
Well, I think, if you're looking at portfolio managers, there was a great study, and actually it came out after the book came out, but Vanguard, believe it or not, published this work that looked at 2,600 actively managed funds. And they looked at the gender makeup of the portfolio management teams, categorized 4 different types of teams, all male, all female, gender diverse, majority male, gender diverse, majority female. And over, I think it was a 10-year period that they monitored the outcomes, the gender diverse, majority female teams outperformed by so much that if that was the only thing that you factored for in your public markets portfolio, you were likely to outperform the market by 49 basis points.
Wow.
So there's a lot of, fascinating literature out there. Now, the all-female teams didn't do as well. So, and interestingly, I think one of the arguments people often make about the fact that there's a relatively small percentage of portfolio managers who are women, that you're getting the cream of the crop. And so that would be the explanation for the outperformance. But actually in this study, one thing I loved about how they designed it is that they controlled for elite education. And so that when you took that variable out, you still saw the outperformance. So really fascinating. One of my favorite data points, which isn't in venture, but I have to say it because it's just so amazing, that one other place where women consistently outperformed from the perspective of investing is with debt. That women are much more likely to repay loans, whether it's a mortgage or a small business loan, and they're much more loyal to their lender. So it's so ironic because, as I'm sure your audience knows, that up until I think it was 1974, women couldn't take out a mortgage without a male cosigner. And in fact, if the banks actually followed the evidence, they would do the opposite, that men shouldn't be able to take out a mortgage without a female cosigner, because women are much less likely to default. They're much more likely to pay back a loan, and they retain their loyalty to their lenders. So there's lots of rich data and stories in the book that I hope your audience will dive into.
Absolutely. Yeah. When you're talking about loans, I was thinking about the Grameen Bank, if you remember that sort of narrative. Of Grameen, started a third world lending platform that went to women in developing countries and gave them de minimis amounts of dollars in a Western sphere, but in a developing country, a meaningful amount. And the women paid back those loans. They did.
They had like their loans.
Yeah.
They pay back their loans, and this is microfinance, where there's so much robust literature. Not only did they pay back their loans, but they also used their money differently than the male borrowers did. They were much more likely to use any excess or profits on their families, and making sure that their kids went to school, for instance, or it would trickle out to their communities. And so, and is interestingly, even at the microfinance level, those same traits play out in this. If you look at CEOs of public companies or entrepreneurs who are extremely successful, women in those senior leadership positions are much more likely to use their capital and their profits to benefit, whether it's their employees or the communities that they're operating in. And so the social benefits are there too. It's not just the financial returns.
Yeah, absolutely. I do want to shift a little bit to venture, and before we do, I just feel sensitive. Our women's fund team is all female, and as you're saying, diverse team. So I want to make sure for anybody interested or listening, the way that it works is we are pulling deals from across Alumni Ventures. The decision-making final team is those women that you saw on the slide, but we benefit from the fact that well, not just alumni ventures, but most of the venture industry, as you well know, is male dominated. It's,
That's right.
8%, sub 8% that are female decision makers. But let's do a little pivot into venture. I know
Sure.
there's a 2018 HBS study that we were talking about. Maybe you can share a little bit about that in terms of the sort of female venture lens. I'm sure people would be curious.
Yeah, and the study showed that only about, at that time, only about 4.9% of venture capital partners were women, and obviously most fund teams were all male, but that when funds did recruit female partners, their returns increased, and the evidence was consistent that when you add women to the team, you get better outcomes. And it really makes sense if you think about what the problems you're trying to solve with venture capital, whether it's new companies in healthcare or the education space or consumer products, AI, that women are the consumers of those products. Women are, certainly in healthcare, they make 85% of the healthcare decisions. Education, wherever you go, women are the market. And if you don't bring people who are the closest to those problems and closest to those potential solutions to the table, you're just going to have huge gaps in your portfolios.
Yeah. Yeah, I think that is one thing that we are both aligned on, that the female voice is needed, but it's diverse voices is what's really, powerful. I know when I was a CEO, just having, a male sort of partner with me building the business made us stronger, right? And so that's yin and yang, and people see things in different ways. Let's do a little bit more of a dive on what you're doing with Rhea and Tara Health, maybe to sort of paint that picture, because I think that's also illustrious here. So if you want to walk those two organizations through for folks, I think they have different complements of what you built, what your personal expertise is. I think folks would be curious about that.
Thanks. So I started the Tara Health Foundation in 2014 with the intention of being 100% mission aligned, which is very unusual in family philanthropy. So in addition to our grant making, we wanted to have a strategy in every asset class for our mission. And our mission was improving the lives of women. It still is improving the lives of women and girls, but specifically we're interested in reproductive health. And in the private markets and venture in the early stage companies, the pipeline for new innovation in the contraception and maternal health space is artificially obstructed by political and social barriers. And if you look at the comparative amount of capital that's spent on new innovation in contraception, which impacts everybody, compared to infectious diseases or oncology, which are serious diseases. I mean, we're all grateful for how quickly we had COVID solutions, and we all have had loved ones with cancer who need resources. But the relative amount of capital that was being used to solve critical problems was horrible. And in my practice of OBGYN, I knew that we were using exactly the same contraceptive technologies when I ended my clinical practice in the 12 years ago, as we were when I started in 1980s. So there was a huge opportunity for innovation, but there were no funds out there that were specifically looking at reproductive health. There were some women's health funds that weren't doing that well, that was having a hard time recruiting and fundraising, but we knew that we needed to develop a venture strategy in reproductive health. So what we did is we used grant money from Tara Health along with other grantors, other funders, to build the infrastructure that then became Rhea Ventures, which is a 501c3, so it's a separate charitable enterprise that is the sole owner of RH Capital. And RH Capital is a venture fund that closed a year and a half ago at 38 million and was able to bring in capital from many other LPs in a very innovative structure that ultimately, hopefully, while it was subsidized by Rhea Ventures and philanthropic money, hopefully if the portfolio is successful, which we certainly expect it will be, could return some of that investment dollars back to the 501c3 along with the LPs. So we're extremely proud of what we've built at Rhea Ventures, not only because of the portfolio companies, which are doing amazing things and really are changing the science around contraception and maternal health, but also because we've created a field that really wasn't there before. And we see many other venture funds coming into the space, and we see a whole new pipeline of companies because if you build it, they'll come, right? And so the energy's there, and really, really proud of what they've done at Ria Ventures and RH Capital.
Fantastic. I love how that sort of the intellectual search for female investors then turns into the practical part of doing the investing, and that journey seems like it's been fascinating for you. I see a couple of questions coming in about some of that practical bits. So one line is the folks who are thinking about being investors and women who want to be a part of that. Do you have any counsel or advice? I know you obviously were trained as an OBGYN, so perhaps not, but I'm just curious if, in the years since you've written the book, if there's any guidance that you would have for women who want to be those investors.
Well, I am an investor now, so I have my new career. I'm not a registered investor. I'm not a OBA, but I certainly have the experience. And I would say this, that times have changed. When my mom was starting her career as an economist, extremely successful consultant, she had to show up at work as a man, right? And she had to just put everything about her family and leave it at home. And that was how she was successful. But what we know now is that it's our lived experience and what we do outside of work that actually makes us better at work. And certainly in the investing space, that we need to lean into our lived experiences and bring them to the table and talk about what we know when we go to the grocery store, or when we're experiencing some artificial intelligence technology that gets it wrong, or our experience with healthcare, that actually, as investors, women have so much rich experience that is common sense and practical and important. We can't leave it at home. So that's my most important advice as an investor. Also, look across the capital that you're investing in, whether it's the entrepreneur, the senior leadership team, who designed the products that you're investing in, who your co-LPs are, or your partners if you're at a fund, and make sure that you're seeing diverse experiences at the table, not just with gender, but certainly with race and ethnicity and lived experience and age and all the things that make investment decisions more robust.
Absolutely. Make that stew of investing more interesting. We have more flavors and herbs.
That's right.
Herbs in the pot. Right. So with respect to people who want to invest, any tips or tricks, or there's any sort of indexes that track more female-centric investors or diverse teams?
Well, it depends if you're in the public or private markets, for sure. I love, there's a tool that you can use easily. It's an organization called As You Sow. They have a product called Invest Your Values, which allows you to screen your mutual funds. And there's a tool in there called the gender equality screen that you can actually plug in the ticker number for your mutual funds, and it'll tell you how well the companies in that fund behave around women, what kind of leadership they have, what the pay gap is, what sorts of benefits they have, how many sexual harassment claims are against that company. And those are an index that is then used to measure the strength of the mutual fund based on gender. They also happen to have a suite of 6 other tools that include being able to screen your mutual funds for whether they are involved with fossil fuels or weapons, tobacco, deforestation, private prisons. So I highly recommend that as a tool for people who just want to sort of get started and feel a little bit better about their portfolios. And obviously, I think you're a terrific resource for folks who want to get into the venture space.
Yeah, we try to make it easy. Thank you for that. So kind of getting close to wrapping up here, you started your writing process in 2019. We're at 2024, 5 years. Have you felt like anything as the needle moved anywhere in terms of the data that you track that we can celebrate, or not yet?
I do see movement, and it's hard to know whether it's because I'm looking for it. I think we need to do a fresh look at all of the evidence to see how those numbers have changed. Like that 4.9% of VCs are women. That's 3 or 4 or 5 years old now. So I know I don't. I'm optimistic. I think that we've made a really important contribution to the industry with this book and all the work that we're doing around the importance of diversity. But this is a crazy time, and there's a lot of pushback. People are kind of hiding under their desks and don't want to speak their values right now. So it may be that we need to wait till 2025 to really see anything change.
Yeah, that's quite possible. Although one of the parts of the XX Edge that I really gravitated toward is that, you know, there's a reason to back female founders, right? Because maybe there's an inequity. You know, people talk a lot about how 2% of venture-backed companies are led by women, but actually, if you look at diverse teams, you're getting up to sort of 15, 18% if you include diverse teams. That still means 85% of venture-backed companies are exclusively led by men, which is pathetic. But at least, you know, if you include that larger number, there is some movement. And that feels like an inequity to me that should get fixed. But what was empowering about reading your book, Ruth, is that what you're saying is there is a financial return that is greater if you back female investors. You stack that onto Julia Borsten's book, which says if you back female leaders, they do better. And you combine the two of those and you say, listen, let's have female investors, let's have female leaders. And maybe if we stack those on top, you have really incredible returns. And that is the inspiring part for me.
Thank you for that, Laura. And I just want to add one more thing to your male listeners, to your men who are listening or reading the book. This is not a replacement strategy. This is about adding more seats at the table. We know that when women entered the workforce, that the economy grew. We know that when there are more women in leadership, whether as entrepreneurs and founders of small companies or CEOs of Fortune 500 companies, the economy grows and there's more opportunity for everybody. And that's the same for gender diversity and also racial diversity. So this is not a replacement strategy. This is an additional strategy. And we know that it's going to strengthen your portfolios. It's going to give you better outcomes. It's going to make life a lot more interesting too. So I hope people take that to heart.
Well, this has been great. Haley, can we get Ruth's book back up on the screen for folks who might want to remember the details? So it's a nice little QR code. You can get it on Amazon. You can follow what Ruth and Patience write about. I've just enjoyed this so much. I really appreciate the time. So thank you. And thank you everybody who listened in. If you have follow-up questions, you can send them in. Our email address for the Women's Fund is women's@av.vc, and we can try to track down the answer for you. But overall, super glad that you're all here and hope you have a wonderful afternoon. Take care.